Good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at the Forex market, at charts, to be precise, together looking at the currency pairs. Using technical analysis primarily, we'll take a look at fundamental news announcements, though, just for informational purposes only. So that's the goal of this live webinar on today, the 27th of March. First of all, though, the disclaimer explaining that online material here is developed for a global audience. Please take that into consideration, that the info in this session may not be suitable for everyone. To get corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. The risks involved are also considered high risk and may not be suitable for all investors. Trading for exchange and global financial markets is considered high risk. Please be aware of that and seek the advice of an independent financial advisor for more information on that. This webinar is for educational purposes only, and by continuing watching this webinar, you agree with the risk disclaimer and its content. Good. Thank you for your attention. Our live trading, Forex trading room, you're going to take a look at what I have to say about my own trading, basically. So we do have some emphasis today on trading psychology. Now, of course, that's not a method to trade. That's just with an extra emphasis on elements that are influencing or impacting trading psychology. We'll still be looking at technical analysis. And a rough go-to trading plan that we often or always use, in fact, is this 5-step module that basically deciphers and analyzes and evaluates whether the currency pair is in a situation that is interesting for the strategy that we're looking for today. Now, today there's no specific strategy or tool that is emphasized because it's trading psychology. So we'll just be generally using fibs, trend lines, and moving averages to decipher if we have an interesting with a trend setup or maybe a reversal setup, etc. So that's the first thing, defining the trend. Then we're looking for opportunities. Then we're checking if there are any filters blocking the trade, right? Because that's an important step. Just because there's a trade setup doesn't mean that there's necessarily a trade going on. Then we establish the trigger, and then we have the entry method. Then it's up to trading plan and trading psychology to trade the plan and plan the trade, or plan the trade and trade the plan, right? There's 5 steps basically, allowing us to analyze and scan and keep an eye on the market and then enter if we decide that the setup is good enough. Trading management is basically, this is the entry part. Trading management is the exit part. And trading psychology is making sure that the entry and exit match our trading plan and that nothing is done without a clear, concise plan and not based on emotions. So that's the implementation of these 5 steps in the trading management. That's very highly connected to the trading psychology. So that's what we'll be emphasizing today. Take a look at Admiral Markets in social media, and with that said, we can take a look at, we got some news on the pound, for instance, on the retail sales in 1 hour 40 minutes from now, the classical 9:30 a.m. London time pound news event today. We have USD GDP, that's going to be interesting, and pending home sales, and some scattered medium and lighter news events throughout the day. Alrighty, pound New Zealand. Let's start with the euro dollar. We're seeing a big fall in the pound New Zealand, by the way. Euro dollar falling. It was yesterday a very choppy day. I remember I said have patience, let it go and hook back to the moving averages and let it bounce off the moving averages. So somewhere in here, for instance, could have been an interesting one. Unfortunately, you cannot see probably where I'm pointing at. Let me quickly open up my drawing tool here. Give me just a second. So yesterday I was referring to that, saying take your time to stake out a position throughout the session because it's a long day And if you like intraday trades, 5-minute charts with these moving averages gives a good idea because you can take it at the resistance here when it hits the moving averages or when it goes below it, and you got some 20 pips there. Every time it goes back, you got some 20 pips. But this is a very, I'm not saying this seems easy, it's not a very easy day to be honest because there was a lot of spikes up and down. I would definitely not sell all of these spikes. The first one would have been good, maybe one of these, but that's probably it. However, if you would have sold all of these retracements then, most of them would have probably worked well, but it was a very choppy day. The euro dollar was very choppy, as you can see. Every time it moved below the moving averages, it found support. Every time it hit the moving averages, it found resistance. So basically, stuck between roughly these two levels, and we see prices now breaking through them. So that's showing some bearishness potential today. 50-minute chart is also pretty bearish at the moment. The moving averages have some space in between them. Slowly but surely, they started to get some space between them, as we see here too, indicating some momentum to the downside. Yesterday didn't seem to be that well set up as yet because we had the support line pretty close by as well, and now we're breaking through that. So plus the moving averages have more distance, has more space between them. Yesterday we were not there yet, right? Remember, this was still intertwined and this was an early break. So we had a lot of choppiness compared to maybe today, where we can see more trending day. Maybe. Let's see. It's still early in the day, but any hook back here could be a good short for downside. The main target, I would say personally, is if we look at the 4-hour chart, could be this 50 fib basically. Right here at 137.20. That's a 50 fib. That's a big fib level on the 4-hour chart. Okay, so you don't want to underestimate that. You definitely don't want to target anything below that. It's just not wise. The fibs are always most of the time used at least 2 out of 3 times according to my stats that I have heard of. So it's quite often it's a high statistic, 66.7%. That's a lot of percentage. Now, we respected the 23.6. We didn't respect the 38.2 that much. We went about halfway. So I'm expecting the 50 to be a value. I'm expecting price to bounce off the 50 fib. If you take any shorts, then I wouldn't aim anything below that. Doesn't make sense. Because it's too high of a percentage that the 50 fib will be used. Okay. So these fibs are valuable, and having an idea where price can go and bounce off is just invaluable info. And if you see that price has used fibs 4 out of 4 times, then probably the next fib, the 78.6 fib, probably will not be used, and there's a good chance that it can go to the 886. Like, this is good information when you use these statistics for fibs. Now, personally, because it's so high, 2 out of 3 times is so high, I just assume that all of the fibs will be respected on the daily and 4-hour chart because the stats are so in favor of fibs being respected that I ignore that 1/3, to be honest. I assume that everyone will be respected because we don't know which one will and which one will not be. Now that the 38.2 was broken a bit, the 50 probably will be. Anyhow, let's move on. Don't want to bore you here, but the 50 fib value, very valuable when we're breaking a triangle as we speak. Yesterday already had that downside momentum that we talked about like this. We have a trend line as well. A triangle within the triangle basically. So back to the 50-minute chart. And we're breaking that triangle as we speak. So I would say today could be a good intraday shorting trend development. It's looking like that in any case. Let's see where the Asian consolidation is of today. Okay, Asian consolidation about 20 pips on the euro dollar, which is most of the time so. Most of the time it is lower than 30 pips, in fact. So that matches. Not many times do you have 30 pips or more. I tested it once and on the pound dollar, and I think it was 1 in 9 times, 11%, did the pound dollar have a bigger consolidation than 30 pips in the Asian session. So very, very, very small percentage, as you can see. Let's see if we can continue with the impulse or not. I hear some background sound there. Does anyone else have that? It's a bit weird. There's a background echo. I have also some weird sound in the background. Some, it's like, I don't know, it's some, not an echo, but it's some disturbance sounds. It's like a river running indeed, yeah. Very annoying. Let me get my contact person here. That's a really annoying sound. Well, I asked my contact person to investigate what it is. In the meantime, I hope you still hear me at least decently. Do you still hear me normally? Bob, can you hear me still? Like, my voice is... That's okay still? Or is it... That's okay. So let's see. I'll try to keep you updated with what my contact person at Admiral Markets says with regard to webinars. Eurodollar 1, 2, 3, 4, 5, sixth candle. Let's see if this is bearish or negative or bullish. If it's bullish, then we'll probably see a bigger chance of a retracement. And it'll be interesting to see if we can respect this resistance. If we do, and we bounce off that resistance just like yesterday, that could be an interesting short. Just like yesterday, I mean this, right in here, right? Why is that interesting? Because we make the impulse, I said, watch out. Yes, the hook back could be good, but you need time. You need to be patient because it's going to take time. You see? Boom, 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 boom. Hits the moving averages, goes below it, and then makes a fall. Okay, sound is gone indeed. Great. So that's what I mean. You got to be patient. How many bars is that? Let's take a look before we hook back. 29. How much time is that? We moved here. We hooked back. It was 1 p.m. Right? 1 p.m. That's 1 hour later than me. That was noon my time. So it just takes time, as you can see, sometimes for a structure to develop. And if you want to be more sure about a certain level, wait for price to respect or hit or respect or bounce off the 5 EMA for the 5-minute EMA band here. So that's the same story basically for today. Now, with regard to, we'll discuss other currency pairs soon enough. Just a couple of minutes, I wanted to maybe share my thoughts about trading psychology because it is a trading psychology webinar, so maybe some of you specifically joined because of that topic. So there's always some things that are very important in my opinion regarding the mental rest and health balance of trading. Right, trading is a high level of performance is needed, right? I mean, in the sense that when you're trading, you are trading with well-funded, well-capitalized, well-knowledge, well-experienced counterparties here in the market. There are many people many funds and participants that are really well skilled in tackling. So when we are trading, we're also competing a bit, at least with them, right? So that is why it's important to realize that this is really top of the notch level. I mean, we're entering an arena that is not the easiest, right? It's not like when you play a sports, you start with, let's say, participants that have a similar level, and if you're better, you move on to the next level. Kind of in sports, you have that structure where as you increase and you improve in your skills, you match your skills with equivalent sportsmen, and if you seem to be better or are better, then you tend to, let's say, go up the sports ladder. And if you're talented enough, then before you know it, you're the #1 world tennis player, or you're playing for one of the best football teams in the world. Now, trading doesn't have that. Trading is basically an open arena. Everyone can join immediately, which of course is great in the sense that everyone can participate, but just because we're participating doesn't mean that we'll be successful, right? So it's just picture yourself immediately playing at your most favorite sports team, your professional sports team, and you've just practiced a couple of weeks or a couple of months. So you got to be careful with that, obviously. So hopefully that mental picture will help with that. That is why it's so important that we really optimize, train a lot, we practice a lot, we sharpen our skills and experience, and get a lot of screening time, because we need to gain an edge, and it's the only way we can gain an edge is by practice, and a lot of screening time, a lot of mentorships. And one of the things that is important is finding the psychological balance. Just like any sportsman, any tennis player that starts a match, right, they have their psychological ups and downs as well, right, during a match. They need to find a balance when playing to keep focused on now and current points. Or golf player, right? They have to find that mental balance. So do we. I mean, if we're distracted by anything, we're not going to have the attention that trading requires, and we're not going to make optimal decisions. We must have energy. I mean, it's not like, okay, so it depends on what type of trader you are. I mean, it would be good to have some energy level in us, some energy level when looking at the charts. Of course, some people have too much energy and some have too little. You need to find a balance there. You want to have proper rest, proper sleep, well rested, not sleepy and half falling asleep before the charts. You want to have proper water and breathing, because the brain is our fuel, is our tool that we use basically to analyze the market. And our brain needs water and sufficient oxygen. Very simple physiological element to it. Also, we need to be actually focused on what's happening now and not what's focused on the past or past mistakes or what could happen in the future. That's all distraction. You can do that after trading. After trading, that's the time when we evaluate, or we think about how we can maybe adjust our strategy or adjust our trading plan, tinker with it, adjust it a bit. At times, of course, think about how we could have traded better today, optimal decisions, where we went wrong, where we went good. That's all great stuff, but after trading. Now, during trading, we think about now. Your dollar, by the way, is moving down, but as I said, I personally rather wait for a hook back to the moving averages. Unless you're in literally traded this break here earlier this morning before we started from 133.80. Of course, that could have been a bounce too, because we went above the moving averages, then below it. That's exactly what we're looking for. But that was earlier. That was before we opened the room, in fact, at about 133.80, 137.80. But do you see at least you see what the idea is of trading moving averages? You got space between them, yes. We do. They're all lined up, yes. They're all aligned. Bing, 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 bing. Right. price moved above them and then below them. So that could have been a short right there with the euro dollar earlier this morning, right? Maybe some of you did that. Then you're up 20 pips. If not, then I would be waiting for a hook back on the 5-minute world, personally. Anyhow, Borch says he can't hear anything. I think others can. Bob, can you confirm that the sound is still good? Or anyone else? Okay, thank you. Alrighty. But I think that you now see, with these elements of the moving averages that we discussed this week, how you can pinpoint certain with the trend continuations, right? So those are all very important mental things. Mental preparation, health and rest preparations. Exercise, water, rested, well slept, breathing, focusing, thinking positively. Picture yourself as the winner, not only now, but as if you already had full success. It depends, of course, each trader is going to be in a different phase. Some of you already have that, so it's easier to mentally picture that because you already have seen yourself as you already achieved that. But sometimes not thinking about the future as a certain goal, but already thinking about the future goal as in the past, I know this maybe sounds funny to you, actually helps with the mental aspect of trading. Keeping your posture straight, positive thoughts and actions. Okay. Other things you want to take a look at are you chasing the market? How are your basically emotional status? Are you in need of a trade? Do you really want to trade? Is there a reason that you're trading just because you want to trade or need to trade? Then you're probably chasing the market. You must have a trade at all costs. Well, then you're going to find a trade that probably doesn't work. Are you over trading? Are you revenge trading? Are you getting in late, early? These are all kind of things that could hinder the trade, and could hinder the trading progress and the implementation of trades. And it's just basically we need to find this balance. It's a tight balance. It's almost like a person told me it's almost like when you're in a circus and you see those people walking over a rope from one pole to another, right? And they have a net below them in some cases, hopefully. And they walk over that tightrope. Well, that person said, I feel as a trader that it's a tightrope that we're trying to balance. And it's an interesting observation. It's an interesting comparison indeed, and it makes sense. I mean, it is in a way we need to balance a lot of things, and we're all doing it alone. We don't have a whole team that is, let's say, experts or implementing a specific part of it. We have to be our own risk manager. We have to be our own manager, our own team player, our own trader, our own analyst, etc. So if you have any questions regarding tips for psychology, let me know. I'll talk about some other things in a while, but let's continue a bit with technical analysis, and we'll discuss trading psychology later on again. However, if you have a question, of course, let me know. Pound dollar, 5-minute chart. You see, pound dollar was an excellent example, wasn't it, of how you can use moving averages as entries and bounces, right? We said yesterday this is an impulse. If it makes a hook back and bounces, then that could be a good trade. Now, some of you might have taken it right in the moving averages. I'm not saying that that's good. There's nothing wrong with it. It was a great trade. However, sometimes you break through those moving averages, like here. You don't bounce off it. Now, there are different time spots. This was before London Open. This was after London Open. So I'm not necessarily saying that they're the same. I just want to let you realize that sometimes price does move through the moving averages, especially because there was no angle at the time. It was flat still. So buy here works fine, but it was a bit risky because it could have also break through it and gone to the bottom here again. The better trade, in my opinion, was yesterday. I'm going back to yesterday so you have a reference what you could be looking for. All right, was when at least you got a bounce off of it because the moving averages are still intertwined. Although we had a spike, when we broke above the moving averages again after going below it and above, and then made a hook back. This was a good buy, or even this one, both of them. Actually, this one may be even better because now the moving averages had some space in between them. However, still this bounce up and hook back was a good one. So you had multiple ideas where you could have traded it. Here, early one though, in my opinion, upon the break early, the green circle is better upon the bounce or break. Upon the bounce or break, and you could literally have done that quite long. Now, I wouldn't have done it after London closed, to be honest, so that would have been my cutoff level. But throughout the New York session, we actually did get those movements up, and I want to really emphasize this because it's vital to understand how you can use those moving averages and understand where the intraday trades are. But for intraday, you need 5 and 50-minute charts, obviously, because if you go to 1-hour chart with moving averages, you're swing trading. Right? So anytime it goes, when the moving averages are aligned and the moving averages perfectly have space and price goes back to the moving averages, you got multiple ideas. At the moving averages, for instance, or when you get the break above it again. Now this trade was about 165.30, and you got 30 pips. Great job. Here, if you take it around 165.40, you got another 30 pips. Great jobs, right? So that's what we discussed yesterday, and hopefully some of you capitalized on that heads up that could happen that day. It does take time because it was 12 noon again, my time at least, before this started to move up. And that was a trending day yesterday. And as I said, patience, patience, patience to get an idea what the movement, the momentum of today is going to be. And sometimes you don't have trending days. Sometimes you just have range days. So it's important to decipher what the difference could be. Using moving averages is a pretty good method of understanding what the day could be. Now, if you look at the pound today, it doesn't look like it's going to be much of a trending day as yet. All these moving averages are intertwined. It was definitely not set up like yesterday. Yesterday was a great trending day. Did anyone take those trades, by the way, on the pound dollar? I might as well ask. I'm just too curious. If not, no problem. But maybe some of you did. And if you did, it would be great to hear from you. I'm just curious if anyone used that heads up here about the pound dollar. Today, regarding the pound dollar, it doesn't look that well set up to me because the moving averages are all intertwined. We still have this lower one below us, so this is kind of like a retracement trade or reversal trade. Doesn't seem very trustworthy though at the moment. We could see a lot of spikes up and down here at the moment. I would be cautious of this particular intraday setup. Let's take a look at 15. Maybe that's a bit different. 15 is a bit different because we can see that we are bullishly aligned already. So the only thing we need for the 50-minute world is in fact a break above this resistance, for instance, and this resistance, and we could have a 15-minute breakout trade to the upside. Let's see. Probably even a break above. To be honest, I wouldn't even take this trade here. I would probably be looking for a break of this high. Not sure if I would immediately enter. It could be that I would wait for a break and a pullback to the moving averages again. Of course, we have the news event. Definitely, Bob. Definitely. So that could give some guidance. However, if I look at it from the moving averages point of view, I wouldn't want to trade it to the downside at the moment. Looking at the 50-minute chart, I wouldn't want to trade it. I would want to trade it to the upside, but what I'm looking for is a break above the black line, but then I want a hook back on the 5-minute chart to the moving averages again. And then I want to see a bounce above the moving averages. So we can see a 5-minute chart, something like this. If that happens again today, I'm not sure if that's going to happen, but if it does, it would be good for the upside. Downside, I'm not too interested in. Now, regarding the psychology, obviously you're going to have a lot of ups and downs here, as you can see throughout the day. I'm talking about yesterday because there's anything to discuss about psychology today. There's no trading as yet, so it's difficult to talk about psychology when you're talking about future events. However, obviously the logical statement of saying that we should follow our trading plan is important, but besides that, you can see that it has a lot of ups and downs. So we need to have the patience for us to wait for the target that we have in mind. All right? And if you see this, you don't have to necessarily scale in and scale out. You could scale in, scale out 30 pips here and scale in again and scale out 30 pips like that and trade it twice. You can also take one position and say, okay, I'm waiting for the minus 618 target, for instance. Then you got a big run here, right, from here to here. Now, if you have that patience, that's the question. If you only you know if you have that patience or not, to keep and hold on to that. From the 5-minute world, it looks very dramatic, all these pullbacks. I mean, in fact, they're very small pullbacks. For me, they seem small because I'm more of a swing trader. But if you look at the 5-minute chart, obviously these pullbacks look very dramatic. So it does require a bit more, a decent amount of patience there. But one good thing is if you see the moving averages like this being torn apart, you can kind of get comfort in the fact that support is coming in at higher spots. And every time it dips back, there's a high likelihood that support is going to be, or higher chance that support is going to be used as a support. The market is going to find that or use that as a method, as a place to dip and use this as a buying opportunity, right? No one wants to buy at tops, not even on the 5-minute chart. But as soon as we get the dip, buyers step in. As soon as we get the dip, buyers step in. As soon as we get the dip, buyers step in. And that's because the market realizes the angle, market sees the support, the market sees the uptrend, and is buying in dips, and is buying in dips and uptrend. Okay, so if you keep that in mind, if you keep that psychology in mind of the market psychology, not the trader's psychology, the market psychology was up, look at the moving averages. They're being torn away from the intermediate and long term, and every dip is bought. So if you keep the market psychology in mind that the data momentum is up, it's going to be easier for you to stay into the targets. It's going to be easier for your own trading psychology, and that's how those two can tie together there. Right now, as I said, 30 pips is 20 to 30 pips is already a decent run up on the 5-minute world. So if you like to take multiple positions, you can definitely scale in and scale out a couple of times here throughout the day. Now the downside on the 1-minute world is totally looking different, isn't it? It's funny because here you can see already the moving average is in fact bearishly aligned. Now I don't trade the 1-minute chart personally, but the concept does work on all time frames. It's just that this is a lot choppier, and I wouldn't want to trade it with a news event 1 hour from now. So the pound dollar is out for the moment. The euro dollar is continuing. Actually, it was the 7th candle that broke. That's quite an exception. Normally it's the 6th candle. Quite funny. Anyhow, if the 6th would have been bearish, a a bit funny because if the 6th is bearish, normally we get the downside. This was the 7th. Doesn't happen too often, but as I said, the time factor rule is just a general rough guideline. It's not an exact 1 + 1 is 2 at all times, of course. And yeah, with that said, let's take a look at other things that's going on. AUD got a small bull flag yesterday, like that. Now got some bounce up, and that's one of those levels that you can think of when you get a close again above the moving averages right here. That could be a buy, and you could probably move the stop loss to below this bottom, move it to break even at the moment. Okay, basically everything is aligned, right? We have, yesterday we took a trade like that too, or was it Tuesday, right? Where we said, okay, let me make the charts a bit cleaner. Where we said, we have a trend in play, and we're looking for dips below and break above, dips below and break above, dips below and break above. Now, mind you that some of you might be saying, what about this dip here? This was a dip and a break above. True. However, there was just one bottom at play at the moment. I preferably take trades that break above after there's two bottoms, because that gives more support for the stop loss. And here with this candle, we only had one bottom. Those are always a bit more riskier. If you have two bottoms, the stop loss is safer. There's like a double protection layer. Okay, so this is a very trending 50-minute chart. Now, one thing is true though, is that we are getting to a point where we might be getting sooner or later, very soon, divergence on a 50-minute world. Once we break this top, we have divergence on the 50-minute world. So I wouldn't be looking to trade it right here, right now on the AUD, just because we had a bit of a double top. The signal was, anyhow, the break above was here. So that was in the past. We have a new one, but that's I wouldn't want to take this one so close to divergence, to be honest. When we have divergence, what is the goal? The intermediate moving average at minimum, right? Could go back even further. On the hourly chart, it looks like this. And once we get 50-minute divergence, there's a good chance we can see some correction on the hourly chart. So the Aussie seems a bit extended still. It still remains extended in my opinion. There was a 50-minute trade earlier today, but at the moment it seems extended, and would rather wait now for a bit more pullback on the hourly. The Kiwi is doing great, isn't it? Kiwi is fantastic. Hopefully some of you took that trade in here. We had another bounce in here off of the moving averages when everything was aligned. We didn't really cross below it though. Sometimes it happens that we actually literally bounce off the moving averages here, so that depends. I don't know if anyone took that trade. Basically on the 50-minute world, we got a bull flag like this, and when we broke above that flag, it was perfectly aligned, right? Bull flag, within the uptrend, we have uptrend, retracement, back to support, back to the intermediate, and then price bounced above it. Let's take a look at that. A good 15-minute candle that's fully above the bull flag, that's fully above the moving averages, that's basically a good close near the high. It twists the short-term moving averages back up. The short-term moving averages don't even touch the intermediate one, which is kind of my preference, but sometimes it does happen. This is even, let's say, an optimization, right? If it doesn't, great. It doesn't touch it, which means it's really a fast bounce. And boom, up we go. So that was a great breakout trade. or with the trending trade here of this 15-minute bull flag on the Kiwi. Now, I'm not sure if anyone traded that. It was earlier today, and for some of you, this might have been midnight or 3 o'clock or whatever. I was sleeping as well, so I didn't trade this. But I was still in this example trade here from the break of the 4-hour chart still, and that's, I guess, up 100 pips at the moment. But this would have been a great scale in. On the hourly chart, I'm trail stopping the 1-hour fractals here, the 4-hour fractals, and we have a 4-hour fractal right here. So I'm staying in and I'm trail stopping it. So any pullbacks and bounces, that's what I'll be moving the stop loss to, and trying to probably scale in another one. To be honest, didn't catch this one because it just happened in a different time zone here. So it's quite wonderful, isn't it, how you can use this as a guideline for determining what's going on. 4-hour chart, just out of curiosity, you see the 4-hour chart. What did I tell you? Also, remember that was the idea was based on the 4-hour chart because we had a move below the short term, but everything was pointed up still, and then we broke above the short term, and boom, that's what you get. Everything is bearish. Everything is aligned. There's spaces, and there's growing spaces. And when we dip below and above, that's what you can get. Beautiful, isn't it? It really is beautiful. Davor is asking, yes, EMA high-low close. Got a different picture on the Euro-Dollar 5-minute chart on 34 EMA line. Okay, let me take a look at the Euro-Dollar, folks. Just 1 second. Let me check. It should be high-low close. This is a custom indicator. Let me check the normal indicator. Yeah, it looks aggressive down to me, doesn't it? Because even on the normal 34 EMAs, look. So it should be looking aggressive down because the price is moving fast down. I don't know, maybe you have it zoomed in more like this, then it can look different. Of course, as you move the time scale more closer, if you zoom in, right, so you see less price action, you're going to see the angle move accordingly. It's going to look less steep. Now it looks less steep, doesn't it? It looks more shallower. That happens when you zoom in. And who remembers the fact that what is the optimal market memory? What is the market memory that the market, roughly speaking, uses the most? Does anyone remember? I know that one of you knows the answer. I know that Bob knows the answer, but I want to see if anyone else has the answer to that question, to the statistics. What is the ideal market memory? So basically, how many bars or time should we see that is the best balance? Because if we zoom in a lot, is this the best way to look at the charts? Or is this the best way to look at charts? So what is the best market memory? The ideal one. And I'm looking for a specific number of candles, in fact. To give you a bit of a clue, there is a specific number of candles. 3, that wouldn't be possible because we would only see 3 candles. So I'm talking about the number of candles. But thanks for your answer there, Samir. But it would definitely be a bit more because this is the minimum. This is the furthest we can zoom in. And the furthest we zoom in, we see about 44 candles. So it has to be more than 44. And if we totally zoom in, it would have to be less than 742. Maybe you can see 3, I don't know. Maybe you have a different chart, it's possible. But 3 wouldn't be optimal. There's a consensus on what is optimal. Dover says 100. So somewhere between 40 and 740, right? That you've already, I guess, can guess based on what I've said. And the optimal that what I've learned when I was trading with my mentor is 150. 150 is optimal. Now, personally, if I look at a daily chart, you were close, Dover. Great job. Great job. Thanks for making that guess. I truly appreciate that, and Samir too. You were the only two, in fact. Unfortunately, no one else participated. But if you look at the daily chart, then I have nothing against looking at, to be honest, at a year as well. Like this, for instance. And how much is this? It's 350. That's quite a lot more, in fact. This is 180. So this is the ideal market memory that I was referring to, roughly speaking. Let's take a look at how that looks like on the 5-minute chart. So if this is the ideal market memory for the 5-minute chart, then this is how the angle looks like. So is the kiwi a trade right here, right now? Well, not in my opinion, because it's very far from the moving averages. And when it's that far, there's always the chance the price is going to move back to the moving averages. So it's very simple to understand that price is very far away from them. Although there are big spaces, how much more can price move up before it makes that retracement to the moving averages? Then I'd rather wait for price to move back to those moving averages. It's, I think, a very intuitive concept, isn't it? It makes sense. Price is very far from the moving average. You want to jump in here with your stop loss all the way below here, and the chance it goes 10 pips up, and then makes a retracement of 30? No. Why? Doesn't make sense. Might as well wait. If you're in that trade, you just trail stop it, and you know that it can go up and it can go down at the moment. It can do both. Doesn't really matter. If it goes down, fine. It should be bounced. You move your trail stop. If it goes up, fine. It will move down later and then bounce. You move your trail stop. That's it. That's the only thing that can be done here at the moment, in my opinion. Unless you're scalping a 1-minute chart. Let's take a look. Yeah, the 1-minute chart. That's the only thing that is possible, because the moving averages have caught up with price. And we bounced here, we bounced here, and we're bouncing again. And we had bounces before that. We had a bounce here on the minute chart. I'm not recommending a minute chart, but just from a theoretical point of view here, we had a break above here, we had a break above here. Some of these don't go far though, right? It's a minute chart. Here and here, and here, and some more. You can have multiple entries, as I said. It depends. If you look at this 5-minute chart, you could wait for price to go back below the moving averages. It depends how confident you are about the setup. You could also wait for price to go in the moving averages and then buy it in them instead of waiting for them to go back above it. You can also even wait for a fractal to break, right? There's never ever one entry method. In fact, I mean, unless you have it very specific for your strategy. With this strategy, with the strategies I use most of the time, there are various entry methods that I just have with tackling the market. So it's not like one fixed way, but definitely that's one of them. Yes, no problem. Just send me an email, Okay, and then so that I have your emails easier for me. No, it's better if you send me an email. Wait, let me write it down. One second. There it is, okay? Let's see. What else are we going to look at? The dollar Swiss C is a bit different. You can see this is more bullishly aligned at the moment. And we had a break of this trend line, and price is bullishly aligned. Hook back here too would seem good for an upside. Dollar CAD is struggling. Dollar CAD is definitely struggling to the downside here at the moment. CAD strength. And we reached the 78.6 fib, which could be a bouncing spot. So in this case, if you look at it from a discretionary point of view, then we are at a 4-hour 78.6 fib, which means that on a 50-minute chart, although we have a downtrend, this could be a turning spot of that trend to the downside. What does that mean? That means that we have a potential of reversal trades on the 50-minute chart. I don't like trading reversals on 50-minute charts, but if you have major support or resistance on a higher time frame, then you could expect the dollar CAD or the trend to stop and maybe make a reversal. And that could happen on this dollar CAD. As soon as we close above the short term, there's that space up to the intermediate and then up to the long-term moving averages. There could be that bullish rebound, bullish bounce off of the 78.6 fib here. So this is basically trying to trade a fib bounce. We had a triangle, right? We had a breakout of the triangle and had a hook back. How do you trade a bounce? You can take the 78.6 fib immediately and directly off of the hourly chart like that, just like that. Boom, bang, take the trade. You can also wait for price to stop at the fib and then close above the short term. Like we had yesterday. We actually had it yesterday close above it. You got to be careful of the fact that we can still bump into resistance and then move down what happened yesterday. And that depends how you manage it. If you trail stop it, then you could have exited with a very small loss. The deeper we get, though, the deeper the fibs, the more likely this is going to get some bounce at one point or another. So you might want to, yeah, it depends how aggressive you want to be in this reversal trade. But that's always, 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 always more difficult with reversal trades because you don't know, do you get the bigger reversal or do you get a smaller reversal? Or do you get a small retracement or a bigger retracement? It's difficult to estimate. However, consider the fact that it is a 78.6 fib and we do have some divergence between these bottoms now. One could safely say that there's a good chance to go at least to this level, if not to this level. But we need to close above the short-term moving average first. And from an hourly perspective, it's all mixed up, so that doesn't look too good. From a 4-hour perspective, we could get basically not only a bounce off the 78.6 fib, but also the support trend line basically kicking in again right there. Let's go back to the euro dollar. Manuel is asking what the target is. The target, in my opinion, is the 50 fib. If we put a fib on this entire upside, then ultimately I think today could get close to that 50 fib, which is 137.23. I think looking at this Fibonacci structure, that would be what I would be counting on or aiming for personally. It's also the minus 1,000 target, which is exactly at the 50 fib. Bit higher, 5 pips higher. Maybe I have the fib wrong. 1 second. Yeah, right at the 50 fib. Ultimately, If I look at the moving averages, I would say there's a good statistical chance that any move up will find resistance for that move down to 137.20, 25. Is that a 100% guarantee? No, nothing ever is, of course, as you know, as I sometimes say occasionally, so that everyone knows that this is all about finding an edge that you can only find after taking sufficient trades. If you take one trade and you lose that trade, it means nothing, right? As you know, or hopefully know. But if I look at the setup, it's the structure of the market, then any hook back to moving averages on 5 or 50-minute chart would have a decent chance of getting to that 137.25. But on a 5-minute chart, anything between 25 and 30 pips is already a very good number. Yeah, no problem, Manuel. Great. I'm happy that that it helped. Let me just double check if I didn't miss anything. We can put a fib on this downside here as well, by the way. And we hit the 61.8 fib here. So that target's in play as well. Let's see where that is. Oh, that's lower. That's 136.94. So no, that's good. Oh, I definitely use a 78.6 fib. It's a good fib. It's a deep fib, and the euro and pound definitely like it. All these fibs are reliable. All fibs are reliable, basically, is the very simple answer. Even the 23.6 and the 886 fib. Basically, you got 6 fibs. If you look at the textbooks, I guess they only mention 3 as the main fibs, 38.2 and 50, 61.8. I disagree with that. I think all 6 are major importance. However, obviously there are some that have more value to my own trading. I don't really use the 23.6 as a level of trading that much, but it is sometimes used. And basically, what you often get when price bounces off the 23.6 is a breakout. 38.2 is often used in shallow retracements and bull flags. 50 and 61.8 are moderate, deeper fibs. 78 and 886 fibs are obviously deeper fibs. The deeper the fibs, the less likely price is going to get to them. But if price does get to them, the reward to risk is tremendous, because obviously the risk below the bottom and the entry at the 78.6 fib is a lot smaller than if you have an entry at the 50 fib. It's a massive reduction in risk compared to the target. The R to R ratio is a lot better. Now, which fib is used more often? I have some statistics on that say the 38.2 fib is used in 1/4, 1 out of 4 times, and the 786 fib gets reached about 40%, I believe, which means that 35% of the time the 50 or 61.8 fib get used. So just to give you a rough idea, I guess. No, that's not my own statistics. This was, I got those statistics from a trader that is very knowledgeable. I'm not sure where he got it from, but I trust the source very much. So, but it's just the statistics, of course. About 2 out of 3 times the fibs get respected, about 67%. So not all fibs will get an equal respect or will be respected. Let's take a look at this hourly chart, for instance. 23.6 gets respected, 38.2 gets respected, the 61.8 does, but the 50 doesn't, right? So 3 out of 4 gets respected on this time frame. But that depends. On a lower time frame, we might see 50-minute charts stopping at the 50 fib, but it doesn't look so on the hourly, right? So it also depends on the time frames. Yes, Sylvia has a good point. Shallow fib means strong trend, definitely. Deep retracement could also mean that price is making a triangle. So if you have a 786 fib here, price could stop at the opposite 786 fib. then move down and bounce again off the 786 fib, then off the 786 fib again, and make a triangle like that, or an 886 fib. That's the disadvantage of deeper fibs. A shallow fib means that indeed there's a strong movement going on. It's just difficult to trade the fibs. Then it's good for breakouts though. It's good for moving averages because that's how you can use or trade those breakouts. Here we have a example of a deep fib, in fact. Price stopped at the 886 fib or 786 there. And in the meantime, price is absolutely sideways. And we remember yesterday we said don't trade the yen because it's just flat and in a range and in a triangle. And if it breaks, there's a high chance it's going to pop back to the moving averages. So that's what it did. It actually moved some pips to the downside, not even that bad, about 40. But still, it's high risk because of that high likelihood it's going to pop back. And that's what it did. Still not too interesting today. Pound yen is not interesting. The euro yen is a bit better because there's some space between these moving averages. A hook back could still be good, but I don't know. I like the euro dollar probably a bit more because the yen is so choppy that don't trust it entirely, that yen. But the euro yen, looking at its structure on the moving averages, could be a short if we move back and bounce. New Zealand yen is breaking up a lot. A classical example of price moving away from its average, moving back to its average, and then bouncing above its average, and up it goes. We remain space between the moving averages here, and they were all aligned. Great example of a New Zealand yen uptrend continuation. That, of course, had the same kind of like element to it as the New Zealand dollar. Odd yen 2 is breaking above here. It too dipped below and above again. Pound odd didn't even have enough strength to dip above the moving averages and already was moving down. And pound New Zealand has been basically like a falling stone. Here falling a lot from this level where we had a dip below, move back, dip below again, boom. So unfortunately, as you can see, a lot of these currencies already move on the move, unfortunately, during Asian session. Everything has already broken and has moved away from the moving average. So let's take a look at the 50-minute world. The only thing that could still remain is a move back to the moving averages and a bounce off of that. Off on the 50-minute world here. Let's take a look at the pound odd. Maybe this one actually could be interesting right now, right here. Let's take a look. You can see every time it hits this long-term band, it's a great sell. We're in that motion as we speak. Let's see. Let's go to the 5-minute world. Pound out could be interesting. It's just a pity that 40 minutes from now we have the news event. But if it spikes up, I wouldn't want to put a pending order because of the news event. But if it spikes up a bit more, into this area with a stop loss above here, it could be an interesting short, in fact, for a very relatively tight stop loss for a pound out at least. So if it gets close to the green line there with a stop loss above the top here, that could be an interesting short from this perspective for more downside on this pound out. We don't have any divergence on the 50-minute world, so that could be very interesting. This particular currency hasn't traveled all too far away from the entry levels that would make sense. So that's possible. Just a pound news event is still in front of us. The others, all these Aussies and Yens, and the Aussies and New Zealands, they've all traveled quite a substantial distance already, and moved a lot. So that's a pity. They moved a lot in the Asian session, which of course can happen with these particular pairs. Here in New Zealand, same stuff, right? Here too, we want a 50-minute hook back here because look at this, such an extended move. It doesn't make sense to trade it right here, right now. If you took the break, obviously in here, right, when you had a bear flag like this, and you took the break of the bear flag right there, and you put your stop loss above it, and now you're just hanging in there and trail stopping it. Well, if you don't like such a big profit hanging in the air because it could move up a bit before it moves down, then you can even trail stop the 5-minute fractals. Then your stop loss would be here. It's a lot of impulse though. It really is, because it moved about 170 pips in a couple of hours. So that's really a lot. I mean, the New Zealand and Aussie can move a lot, especially these crosses, but this is a lot. So any of these bear flags were great 50-minute trades. Intraday, you could use 5 or 15. Yep. Not higher because, well, you could use 30, but if you really want to close it within the day, you want to use 15 probably, or 5 indeed. But we're at a point in time that a lot of these currencies have moved already. So the Aussie CAD is the only one that probably didn't move as yet and could be ready to go up again. Look, we have an uptrend. We have everything in play. We have uptrend, uptrend, uptrend. We have space, increasing angles. Price, every time it dips here was good buying opportunities. So maybe here too, could be. We need a break basically above this top, a close above it. So when we close above that level, that could be an interesting long. The stop loss could be below, I would say below this bottom right here, or this bottom. Right about there. And I trail stop it. Right, if you would have trail stopped any of these dips here and breaks above, then you're still in this trade, in fact. It's not easy from a psychological point of view maybe to let this profit go, but if you over and micromanage it, then probably wouldn't even have lived so far in this trade because you probably would have clicked it out somewhere maybe here. So the Aussie CAD is something that's definitely on my watch list. New Zealand yen too. It's such a big impulse. If this makes a hook back to a fib, for instance the 50 or the 61.8 fib, I think that's interesting buying opportunity because this is a very strong impulse, so it should get one more bounce up. But that will take some time because it has to retrace first and then bounce, so that's going to take time. The odd cat is closer to breaking, so that makes more sense. That's something that could happen soon. That's the only one that so far that we've seen that is in a trending position that could be breaking soon. Other than that, you can see this is all mixed up. New Zealand Swissy, same story basically. It too, I was actually, believe it or not, I'm a bit annoyed, but that can happen. I actually was thinking about trading the hook back here or the bounce off of it, but I decided not to take this one because the moving averages were too close here. Well, they were still not touching each other, so actually it was still a bit of space, although not much of space. And, well, it's a pity because in retrospect, obviously, you can see it's up 130 pips at the moment, and the stop loss could have been here at the moment. Why now? Let's continue. Let me take a look if there's anything trending at the moment. Odd Swissy too, but hasn't made any retrace so far. That's about it at the moment. I'm talking about trending modes. So odd cat is the only one at the moment. The others are all trending, and we need retracements first. Very simple. And it depends what type of trader you are, if you're looking for retracements on a 15, 5, or hourly chart. Let's take a look at the euro dollar. Let's see. Yeah, thanks Davor for giving a heads up there. Just because the 5 is close to the EMA, don't get me wrong, it's not like you want to necessarily, this is going to take, I mean, look at this, for instance, it was closed, then moved down, it's closed and up. So just that it's close, you still want to be patient, depending on how you trade it. One of the things you might want to look at, for instance, is the AO to have an idea when the retracement is ready. You can see that this is just a curving just now, so we still have plenty of time, Because look, here, when we made this bear flag, when did the downside start? Doo-doom. When it was at the zero line. Okay, so that happens more often. Let's take a look at some other examples. Let's see, pound dollar maybe. Pound dollar. Where did it bounce up again? At the zero line. Here at the zero line. Now we did have some bounces within that move. I'm not saying. Here we had a dip. It didn't get quite to the zero line. That's true. But usually speaking, I would say the first break and pullback of the day, like this, should go back to the zero line. And then we got the trending mode, and then at the end of the afternoon, we got one more pullback to the zero line. Zero line. Close the zero line. Fall, move up to zero line. This subsequent fall, though, didn't have a move to zero line. This was one swing high, swing low. That was one movement. Can sometimes happen. In that case, if you're waiting for a pullback, it didn't happen here. If you took the first initial break, great. Otherwise, it didn't happen. Here, though, move down, pull back to zero line. Move up, pull back to zero line. Pound dollar is indeed making this triangle like that. So back to the euro dollar. So looking at this particular formation, 1, 2, 3, 4, 5, 6th candle, we'll probably see some correction like that throughout the rest of the London Open, I would say. And when this gets to zero line, we should see some downside after that. That's what I'll be looking for in any case. Let's see, we got 2, 4, this is the 6th candle. So most likely, we'll know in 2 to 7 minutes from now, but most likely this impulse is over. You can see even the fibs on this time frame are useful. Price went down, got to the 50 fib, went to the minus 618 target. Then went to the 23.6 fib, then went to the minus 618 target and the minus 168 of the first fib. And now it looks like we're going to get the bounce. And it really depends. If we want to see, once again, to emphasize, we want to see a bear flag like this, and then this go to the zero line. If this starts to fly up too fast and then starts to make a bull flag, you want to be careful. Roughly speaking, though, one would expect roughly at max this to be the resistance, which is probably, if you put a fib on the entire 15-minute down move, roughly the 61.8 fib. Something like that. Well, folks, thanks so much for joining us today. We're going to have a live session, our live webinar tonight at 5 p.m. GMT, 6 p.m. Central European Time. It's going to be about strategies. So looking forward to see you there and then, and well, wish you all a great day and great trading. See you soon.